Most of our money in a lifetime moves around the bank. Once we've reached an age where we start earning money on our own, we're faced with the responsibility of keeping our money secured and well kept. Sometimes, some of us start to have bank accounts at a young age where our parents help us set them up. However, we always wonder how banking works. The simple way to go about it is we lend our money to the bank keeps it secured, and we can withdraw from it any time. For your own benefit and security, you might have found yourself asking, what kind of money should I put in the bank? What happens to my money while it's in the bank? How do I access my money easily? We should also ask questions in this vein. How do banks make money? How do banks keep the money coming and going? This is where the complex system of banking comes in. Worry not. Finance Aligned will help you understand banking. Knowing how the system works arms us with the necessary knowledge about our financial situation and future. Before any of that, if you have not subscribed to our channel, it's best to do it now. You'll learn more about finance once you join our community. You'll also be updated about recent videos of any financial topics. Just click the notification bell to receive notifications anytime, anywhere. The concept of banking has been around since 2000 BCE in Assyria, India, and Sumeria. The first prototype bank is not a building but a person, who is the merchant. This merchant gave loans to farmers and traders. The ancient step in banking is the concept of handing out loans. The system of deposits only came up during the Roman Empire and ancient Greece. Lenders in temples accept deposits while giving loans, performing the exchange of money. In the eastern part of the world, China also knew about the system of money lending. However, the modern banking system only started in Renaissance Italy around the 14th century in Florence, where the Bardi and Peruzzi families established branches all over Europe. The most famous Italian bank was the Medici Bank, established by Giovanni Medici in 1397. Banking developed since then, growing into a banking system that we know of today. A bank is a financial institution that deals with money and other money-related services. Traditionally, banks intermediate in financial services such as cash deposits and loans, while profiting off the deposits by collecting interests and loans. Among the recent developments of the banking system are mutual funds and credit cards. Additionally, banks also come in several types such as retail banks, commercial banks, and investment banks. Each banks cater different needs of every person. The most popular type of bank the majority of us utilize is the commercial bank. As you can see, banking has gone from simple to complex in a matter of time. Such as any human endeavor, that the longer we live in this world, the more we improve in our way of living. First off, what do you call the money that you had in the bank? In fact, what we call money in today's world was not the currency during ancient times. At the earlier stages of trade and commerce, people exchanged goods, such as seashells, tobacco, and metal coins. These goods are what they consider as forms of currency. The money we use today is considered bank money, and the whole concept originated with the Bank of Amsterdam. People deposited huge amounts of money in the form of bills, 600 gulden or upward, and withdrew such amounts or less. In modern words, this is called the transfer of deposits or credits at the bank. It's through bank money that customers and the banks owe each other. This money often exists in checks, which are commercial bank papers meant to literally mean I owe you. The money can also be transferred electronically, such as debit cards, wire transfers, and internet payments. Before the 20th century, bank money consisted of banknotes which were equivalent to money and were issued by the bank without any interest. These days, however, bank deposits have replaced banknotes. Your money from the bank is redeemed through the various forms of bank money. Banks promised their customers that they can exchange their bank money anytime they wish, and failure of compliance will affect the bank itself. Yet, checks and banknotes are not the only way banks supply money. Modern alternatives such as mutual funds and credits are often offered to bank customers where they can write off checks from their own shares. While commercial banking follows the same method, some credit works in a way that a bank customer usually withdraws money from their own deposits instead of making loans from the bank itself. Does this sound familiar? It's how most of us do banking. How does credit work? Bank credit is the total of bank money a person can borrow from the bank. A few examples of bank credit are car loans, personal loans, and mortgages. Sure enough, it sounds like any aspect of your life where you need money can easily be covered by the bank, but it still depends on whether you can repay your loans or the amount of credit the bank can let you borrow. Remember that banks make profit from the deposits of the people. It's through the funds banks lend out that the money goes round and round between bank customers and financial institutions. You might be familiar with your checking and savings accounts, where most of us keep our money. We interact with our accounts by depositing and withdrawing. The bank puts interest in our money. Some people invest in banks as well, through certificates of deposits. Once again, the banks make profits out of the investment through collecting interests. How do we pay the interest bank puts up on our deposits? Before getting into an agreement with a financial institution about your money and credit, both parties must establish trust. Applying for credit means you are trustworthy enough to repay the principal balance of the bank money you borrowed and its interest. Banks approve your credit when your rating and income is worth the application you are appealing. This includes assets, collateral, and debt status. Therefore, you must pay your remaining balances before extending credit, and your debt-to-income (DTI) ratio must not go below 20%. Banks usually regulate higher interest rates, lower credit lines, and restrictive rules when it comes to bank credit to ensure the survival of the bank money from both parties. Bank money is one of society's innovations that bring convenient financial transactions. The money revolves around the marketplace faster and easier. On the contrary, reliance on bank money is unwise, when banks can only have so much reserves of their money. Any day the banks will fail, and the bank money can disappear without any trace. On a large scale, you can look at the Asian currency crisis in Thailand back in 1997. A country's bank deposits, when redeemed, can destroy a nation's economy. Bank credit comes with its own warnings as well. If you don't calculate your loans well enough to have a secure transaction, some of your assets can be at risk. You might run into problems like paying back your balance within the agreed terms and conditions. All in all, bank credit poses as many threats as gains. You can only approach it with a clear head and calculated intentions. Banking is a risk management system. Converting your money into bank money requires a gamble worth the loans you can incur later. Banks and financial institutions must also carry on with their business, ensuring that they do not go bankrupt and sacrifice the money of their stakeholders. It's an arrangement requiring trust between the merchant and the trader. Money is what makes the world go round. It's what moves nations and people to continue surviving in this world. Banks have the responsibility to keep our money safe, and we must also partake in calculating the risks we take in dealing with our money. For a smooth flow of our cash, the merchant and trader must understand their roles in the system that has existed way before paper bills come into picture. Banking, a way to keep the world moving in its own currency. Banking is one of the many things you need to understand in order to reach financial literacy. Knowing this will ensure that you will make the right decisions when it comes to choosing your bank, cards, limits, and handling your money. If you want to increase your knowledge about finances, check out our video of the 10 things you wish to know before you retired. That ends our video for today. Hopefully you've learned more about banking than you already did before. If you did, please give this video a like and a comment. We'd love to hear your thoughts, suggestions, and reactions. If you want similar videos, do not forget to subscribe to us and click the notification bell so you can be up to date with our uploads. Until next time, goodbye!